This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. But just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here by looking at the S&P 500, and yesterday, what a move towards the upside. We ended the day up 3.31%. This was on the back of Jerome Powell's comments yesterday during his conference, where he basically said, you can expect smaller interest rate hikes as soon as this month. So that caught the markets by surprise, and it's left a lot of traders asking the question, what are smaller rate hikes? Is it 0.25 basis points? Is it 0.5? Well, it's definitely not 0.75 basis points. So that's why you saw this nice jump towards the upside. And we've actually gone up and hit my target. It was only yesterday when I was saying, but I still believe this market had more upside. And any dips that occurred, you should be a buyer. So a massive congratulations to my Signal team and everyone else who listened to me on that call. We went up and hit the top of this downtrend that we've been trading in for the whole year. And, you could start to say that now things start to become a little bit problematic. I still believe that we would stay up here for the next 3 to 5 trading sessions, but ultimately I do believe we will start to see a reversal back towards the downside. But what makes it problematic is that on Friday we have the jobs number, and we found out that the jobs number yesterday was very weak. So if the jobs number does come in a lot weaker than expected, then that's going to be good for the markets. Don't forget, we're trading in a stock environment where good news is bad news is good news. And then, of course, next week we have the CPI, and then followed by the Fed minutes. So, if the CPI comes in a lot lower than expected, of course, yesterday we had the Chicago PMI coming in a lot lower than expected, which suggests that inflation's coming down. Of course, with the massive decline seen in the crude oil markets, everything is pointing towards a lower core CPI reading, and that would be very, very bullish to back up the previous CPI reading that we had on the 13th of August, and it would just indicate that this is now a trend, that inflation is falling. It wasn't just a one-shot lower CPI reading that we had back in October. So things are starting to look quite bullish from a fundamental perspective for the US 500, but I still believe we will fall lower. So I would be looking at this area as a fantastic selling opportunity. I think that we could potentially head back down towards that 50-day EMA down at around 3,900. And, I personally believe that going into January to March period, so that 3-month time frame, we could potentially see prices fall back down towards the lows down at around 3,500. So I would not be looking to buy here. There's no sense in that whatsoever. You'd just be giving yourself into FOMO. I would definitely be looking to take profits off the table, and if you don't want to sell and you just want to sit and wait, that I would definitely recommend that as well. But if you are a day trader, then I would definitely be looking to short here within the next 3 to 5 trading sessions.